Diana, thank you so much for joining me today. Tell me about yourself and why you're here at PPIF.
Sure. So my name is Diana Liu. I'm a principal at Blue Owl Digital Infrastructure. Our division was recently formed through the acquisition of IPI Partners, which is a wholly focused on hyperscale data center PE platform. So we invested only in hyperscale data centers since 2017 and have built up a portfolio where we now believe we are one of the largest owners, privately held owners of data centers globally. We're active in the US, Europe, and APAC. And to date, we have raised about $33 billion of capital across debt and equity just for our hyperscale data center strategy. But we have not yet tapped the US PP market or any PP market globally. We employ a lot of construction debt within project finance. So we are very aligned with the infrastructure way of thinking about these sorts of assets. But we have not yet been able to access this robust market, which is private placement. So we're here to talk about our asset class and understand the investors' appetite for data centers, which does feel like it's growing and has been growing in this space for some time.
So tell me more about the digital infrastructure. What is its role in today's global economy?
Yeah. So digital infrastructure is really the backbone of the global internet today. So if you think about the amount of data that we're using day to day in our regular lives or what corporates are using, we live a much more virtual life than we used to. And that virtuality needs to be hosted somewhere. It exists in a physical format, and that's digital infrastructure or data centers. And within the data center sphere, there are a few different types of assets. They're not all created equal in some ways. The particular type of data centers that I'm talking about, hyperscale data centers, are really the assets that are supporting the public cloud. And the major players within the public cloud are in AWS, which is Amazon, or Azure, which is Microsoft. And those companies are providing essentially hosted compute and storage for the global economy. So companies that are using, let's say, email or Teams to talk to each other, all of that computation exists somewhere, and they exist in a data center. The investors for the data center will own the asset. So really think about it as the four walls and the roof, and it attaches to power and fiber. But these tenants are responsible for the servers and what goes on inside the data center. So really what we think about when we think about our investment strategy, we think about investing in the thing that's not going to change very much from period to period, not as exposed to the technological risk of maybe some of what's happening inside the data center. But because the cloud is hosted in our assets, it becomes a very mission critical asset for modern society today, because everything that we do virtually needs to live somewhere, and it's no longer hosted on premise at the site of the companies directly.
That makes total sense. And it really highlights the importance of digital infrastructure. So tell me about the opportunities that this asset class offers within private placements.
Sure. So as I mentioned, we haven't yet tapped the US private placement market, but we think it's a really good fit for the private placement market because there are a few features that are common to data center assets. One, they are typically, as I mentioned, core infrastructure. We view them as critical assets to our customers and also to the functioning of society. So they're unlikely to be subject to the whims or trends that might be present in other asset classes. Secondly, they're typically signed with these high credit quality tenants, which are often rated investment grade. So most of our portfolio, for instance, is leased to IG rated customers. And that allows the investors in the PP market to get access to that degree of tenant safety while still earning a spread to what they could otherwise get in the public bond market. Thirdly, typically we sign long-term leases at our data centers, which will really fit well in with the cash flow analysis perspective for the PP market. So we're typically signing at least 10 or 15-year initial lease terms, and that translates well to the rating agency approach for the PP market. I would say that one thing that's prevented us from accessing this market before, because we've typically financed our stabilized assets into ABS, is that the US PP market historically has been a little bit less comfortable with renewal risk. But now, as investors and rating agencies become more comfortable with the fact that data centers are in fact critical infrastructure, I think that view will start to evolve and to match the rest of the market, both bank and ABS.
So tell me about the role and size of the digital infrastructure market as opposed to the infrastructure market.
Yeah. So let's start with the bank market, which is what we've been using primarily for construction debt. Of the project finance market in total, last year data centers became the largest share of that overall market for the first time, and will continue to increase as a share of the total market year over year. There was about $30 billion of data centers financed on a construction basis from the bank market last year. Now, the US private placement market, you probably know better than me, but I estimate it to be about $100 billion. And data centers, so far, there's only been a handful of issuances, so it comprises less than 1% of the total market. And we're really looking forward to being able to access this additional capital because data centers, from a construction basis, have become increasingly large. So, for instance, a few years ago, a 10 to 30 megawatt site would be considered a hyperscale campus or a hyperscale building and considered to be a large project. And let's say that would cost somewhere between $100 million and $300 to $400 million to build. Now we are leasing entire campuses of multiple buildings, sometimes dozens of buildings that are hundreds of megawatts up to a gigawatt. And now we're talking about multi-billion-dollar projects. So our requirement as an industry to tap additional sources of capital also makes it a good fit for the PB market at this point in time. We would also like to increase exposure that investors can get to what we view as a very compelling asset class as well.
Excellent. So can you tell me about the trends that are coming up in the next couple of years then in digital infrastructure?
Sure. So one of the things that you will read about that you've seen in the headlines lately is AI. And the emergence of AI is a huge component that's driving data center demand. While that is true, we can't forget that cloud compute and cloud growth has really served as the backbone of data center growth to date. Cloud is still growing about 20 to 30% year over year and forms a lot of the demand that's causing the supply and demand mismatch within the data center market, which is that there's not enough power and powered land within primary markets to serve that cloud demand. So what we are experiencing is rising rents in terms of what the tenants are able to access, as well as longer lead times for development. So on our side, we are putting in more years of pre-development into any asset before we bring it to market. So what AI is going to do to this already existing trend is exacerbate it. And that's one of the reasons why we think these assets are very sticky, and we can think about renewal risk as being mitigated by this overall supply-demand landscape for data center procurement. But that said, AI is going to be a big part of how the hyperscalers think about monetizing and earning revenues. So for instance, the hyperscalers really actually want to be in some ways agnostic to what kind of specific AI startup large language model they're exposed to. They would like to sell applications of AI as part of and layered into their cloud offerings. They're not necessarily trying to make a bet one model is going to be better than another. And I think that's another reason why investing in a hyperscale data center with a hyperscale tenant is relatively more protected, because our tenants can benefit from the AI trends without you necessarily having to place a bet, oh, I think the DeepSeek model is going to be better than OpenAI in the long run. You don't have to make that bet when you're thinking about a hyperscale tenant.
Diana, thank you so much for joining me today.
Thank you, Lily.